For over 100 years, 3M has been a great company. They started in mining and manufacturing, but they had an innovative culture where they continued to innovate products and create products that we use every day, like our post-it notes and a variety of products that we've used, especially during COVID. If you remember, a lot of the masks that we used were created by 3M. And this is a great company. Last couple of years, 3M has really fallen on hard times if you look at their stock price. They've had a couple lawsuits that, came around and have really held the company back. They're getting through those lawsuits, I'm glad to report. And I think the company is an interesting investing idea for me. I don't currently own any shares, but I'd like to evaluate 3M and make a decision whether I should start buying shares in this great company. My name's Victor, and I like recording videos and putting them on YouTube. I'll go through analysis of 3M and share that with you. I'll develop a value for 3M based on free cash flows and share that with you. And I'll also make a decision whether I'm going to buy, hold, or sell. I follow a process. I'll share that process with you. And I encourage you to develop a process and evaluation method that you can use as you create your investing strategy and execute your investments. Do me a favor and like my video and subscribe to my channel. And please provide comments. I'd really appreciate hearing from you, hearing your comments on 3M, as well as other investing ideas. Now let's take a look at 3M. Back when I was in college, we studied 3M, and they had a culture where they actually gave employees a certain amount of time from their weekly schedule to spend time thinking of new products, innovating, creating new products. And that culture really enabled them to create, new, really cool products. And the company has really flourished in that type of setting where employees were creating these really useful products for our economy. That said, 3M is diversified across healthcare, safety, industrial, electronics, and consumer products. They are nicely diversified. They're a solid industrial company that has been growing over time. Overall, I think their brand is excellent. I know that they've fallen on hard times, but if people think along the lines that I do, it's a great American company. It's a great American success story. So I think there's a great company behind this brand that I think is going to make a comeback. What's held the stock back for the last couple of years have been these lawsuits, and one of the lawsuits is being resolved, and they're going to be paying out a significant amount of money. They do have the money on the balance sheet and have the resources to pay it. It'd be good for them to get through all these lawsuits and not have any more lawsuits and then just get back to operating this company. I believe that 3M is currently discounted by 29%. And what that means is that I believe each share is really worth about $114 per share, but the stock is trading at around $89 per share. Let me get into how I got to the value that I think the company is worth. And I use two methods. One is the free cash flow method, discounting all free cash flows that this company is going to produce in the future. This is the proven way that most value investors, all the great ones like Warren Buffett, Charlie Munger, and many others use free cash flows. And the reason for it is cash and the amount of cash that a company generates is a true measure of the value of that business. They earn the cash, they put it on the balance sheet, and then they figure out how they're going to return it back to investors. And if you ran a small business, it'd be the same way. If you had a small business that generated a lot of cash, you would see the value of that business. If you had a small business that didn't generate any cash and you struggled to make a profit, you'd realize that that business didn't have a lot of value. Same holds for a very big business. So let's take a look at free cash flows. So first, I'm going to look at the average over the last 3 years, and I'm only going to take 80% of that average as a starting point. I think that's a conservative way of having a good starting point for 3M on year one of my free cash flow model. I'm going to grow cash flows by 5% in years 2 through 4. So these cash flows are going to grow just a little bit over the first 4 years. After the year 4, terminal value represents all the cash flows in the future. So all the cash flows I expect 3M is going to produce. 3M's been around for over 100 years. So I think they're going to be around for another 100 years. So terminal value is really valuable for a company like this. And the long-term growth that I'll use with long-term growth of the free cash flows is 3%. Weighted average cost of capital of 9% for 3M. And all those free cash flows, if I take the net present value of those cash flows, it's $71 billion. I'm going to add the cash that's on the balance sheet and take out the debt that's on the balance sheet to get to an equity value of $59.5 billion for 3M. Their market cap's currently $48.7 billion. So it offers up a 22% discount if you measure the free cash flows in a conservative model that I expect from 3M. Now, if I look at earnings per share, the company is really beginning to somewhat begin to turn a corner on these lawsuits, and their profitability is returning. And I'm using the forward 12 months of earnings per share expected, which is $9.45, using a PE of 18, which is fair. That should be the average PE for the S&P. And I think it's a conservative PE for a company like 3M. Again, I still hold the 3M brand in high regard. I think a lot of people do. And if I use those figures, a 3% growth rate, and these factors into the formula that is right here, I get a value for the company of $127 per share for 3M. The stock market will sell you shares at $89 per share. So it offers up a 44% discount if we use the earnings per share method. I blend the two, but I put more weight in free cash flow method and get that 29% discount on 3M. One last note, debt to EBITDA, debt is under control, and it's well below that 3 of debt to EBITDA ratio that I'm looking for. So it's good to see that debt has not climbed. That would have been even worse if 3M is struggling with lawsuits and had high debt. That'd be a double problem. The other thing that I hear in the marketplace is that the dividend may be cut. Whether the dividend is cut or not, it doesn't change my valuation of the company. A dividend is great. It's nice cash flow for the investor. But the value of the company truly is represented by the free cash flows it generates and the earnings per share. It's not how much of that money and how quickly they're returning to investors. So as long as the company continues to heal from these lawsuits, continue to perform well, I value the company along those lines. And whether they cut the dividend or not doesn't change my valuation of the company. Looking at the 3M stock year to date, the stock is down 27%. And I think that offers up a good opportunity because I've been tracking 3M. Again, I think it's a great company. And I'm actually rooting for their comeback because I just think it's a good company. And it really has made the stock price go way down this year. And that offers up a nice, discount between where I think the company is worth and where the company is trading. So it makes it an attractive situation. They pay a high dividend. Again, this dividend may be cut. Again, it doesn't change my valuation. So do I want to be part owner in this company? Do I think the industry is worth being a part of? And the answer is absolutely. I'd be privileged to own shares of 3M, and I think their industry is excellent. 3M has proven for over 100 years that they are a very relevant company and that they really provide a lot of value to the economy. I think their culture is great. Their management team's doing a good job to get them through this rough patch of their history. Debt is under control, a good discount on a great company. So I'm going to begin to buy shares in 3M. Thank you for watching the video on 3M. I hope you found it interesting. Would love to hear comments from you on what you think of 3M and maybe what your plans are on 3M. Do me a favor and like the video. Subscribe to my channel. I'd really appreciate that. Good luck investing in 2023.